What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, the home, the residing residence of the #1 stock market trading and investing channel on all of YouTube. In today's video, we're going to be talking about my top SPACs, my top 3 SPACs to buy and invest in for 2021. We all know that 2020 was the year of the SPAC. They were on fire and a lot of them went to the moon. But I also believe there's still a couple SPACs out there that have a lot of potential, a lot of upside potential, baby. I think these 3 stocks have a lot of upside momentum and potential. If you're not familiar with what a SPAC is, it's basically a blank check company that's sole purpose is to take another company public. So we had stocks like Nikola, Hyliion. Those were all companies that went public via SPACs. If you're new to the channel, do me a solid and hit that subscribe button for me. What are you waiting on? And turn on those notification bells, and everybody go down there and like that button. Also, if you like free money, because I know I do, I love me some free money. If I'm walking down the street, I see a dime, you better believe I'm picking that dime up. Check out the link in the description for Webull. It's the broker I use. I absolutely love Webull. They're offering the Touchdown Trades community 2 free stocks valued up to $1,850 if you sign up with the link in the description. All right, let's jump into these SPACs. Let's break it down. Let's get that paper. Before we get started, check out the link in the description for the free trial to the private Discord chat where you get my buy and sell orders in a real time. Come trade with me, risk-free. You don't like it? Cancel, no charge. You like it, stick around. It's no secret that SPACs have been performing, ka-ching, making the bank, paying the investors, getting us retail traders straight up paid. And I think a lot of these SPACs are actually going to be good long-term investments. And the 3 that we're going to be talking about in today's video, I believe to be good long-term investments. But not even speaking from a long-term perspective, just a short-term perspective. Look at how the top 10 SPACs performed in 2020. We had the top SPAC, QS, ticker symbol QS, returned over 1,000% in 2020. How about DraftKings? Big sports betting push we see going on in Congress right now. It gave back 400%. How about IRDM? 300%. IMVT? 372%. BWMX? 230%. And the list goes on and on. The first SPAC I want to break down in today's video is going to be this ticker symbol HOL. This is Helicity Inc. They're going to be taking Astra, the space rocket stock, public. And I love Astra. I think this is a really good long-term investment. Space is going to be a huge trillion with a T dollar industry. And satellites are going up in record numbers. In order to get those satellites up, you have to hire a company that has the rockets that are capable to bring these satellites to space. Astra's mission to launch a new generation of space services to improve life on Earth. It's all about getting those satellites to space and charging their customers a boatload of money to do so. Space is the new economic frontier. I completely agree with that. Astra is the 3rd privately funded U.S. company in history to reach space and demonstrate orbital capacity. Right now, space is going to be a $1 trillion industry. It's on pace to be a $1 trillion industry by the year 2040. A $1 trillion industry. That is an absolutely massive industry. We're talking about a company, Astra, that is only expected to go to market with a valuation of about $2 or $3 billion. If they can get a sliver of that $1 trillion industry, we're talking about a gravely undervalued stock. Okay, $216 billion in satellite manufacturing spend through 2030. $40 billion in government investment in space. In order for Astra to be successful, in order for Astra to make money, companies have to be sending satellites to space. In order for a company like this to be profitable, the demand for the product needs to be there. The product in this situation is the satellite needing to go to space. And look at how the growth is expected to play out for satellites needing to get to space. 2020, there's expected to be 4,000 satellites launched, or there was 4,000 satellites launched. But look at by 2029, there's expected to be over 9 or 10x that amount, up to 40,000 satellites launched in 2029. I expect that number to just continue increasing. And that is good news for Astra, because a rising tide lifts all boats. If more satellites are going to space, that is more potential revenue, potential market share for Astra to capture. Once those revenue numbers go up, then you're talking about a company that's trading at 2 or 3 billion right now. If the total market share, if the total overall market size increases by 10x and Astra keeps their market share, then you're talking about a stock that could theoretically 10x if the market size does indeed increase by 10x. And look at this revenue growth. No pun intended, Astra's revenue is going to the moon. Okay, in 2021, we're expected to have a measly $4 million in revenue. But by the time we get to 2025, we're going to hit 1.1 billion in revenue. And if those revenue percentage increases continue, and we saw that the numbers of satellite going to space is expected to grow, then by 2029, I expect that to hit 2-3 billion in revenue. We're talking about a company that has a lot of potential, in my opinion. All right, so all these SPACs we're going to talk about today, I'm going to put a 2-year, 24-month price target, my price target, personal price prediction forecast on all of these stocks. So for this Astra Hyliion right now, I'm going to put a 2-year price target of $50 per share. My favorite SPAC probably of these three is going to be Proterra, baby. Proterra. I like that name too. It rolls off my tongue really good. Proterra. Or if you're Spanish, you go Proterra. Proterra. And they are merging with the SPAC ACTC, and this company has an in at the White House. We'll go over that in a second. I think it's undervalued at these levels. Had a nice run up once it was announced, hit over $30 a share, but I think we're getting the opportunity to take a look at this at a discount, trading right now at $25 per share. Proterra is a EV bus manufacturer, mass transit bus, public transportation bus, school bus manufacturer, and they also manufacture EV charging stations for fleets and EV batteries as well. The merger is going to happen with ACTC, and it's expected to go to market with a market cap of around $1.6 to $2 billion, and I think that number is low. I think that number is really low. So we're on the Proterra website. We can check out what they do, and we can look at the Proterra powered. They have the public transit bus. Take a quick glance at that. It's just a normal public transportation bus that you would see driving around every city in America. And I think as Congress passes these clean energy bills, green bills, you might call them, in Congress, I think a bunch of cities, especially the more liberal cities at first, are going to transition to clean energy formats like these Proterra buses. How about school buses? It makes no sense to have gas school buses or diesel school buses when you could have an electric school bus that is just as efficient and has the range to get the job done. And how about last mile delivery? We got a workhorse competitor on our hands here, and I know Workhorse is expected to get a big chunk of the USPS contract, but I think Proterra has more outs. I love Workhorse. Don't get me wrong. I am a big Workhorse believer. I'm a Workhorse bull. I'm invested in Workhorse. But what do I mean by more outs? I look at investments as a perspective from like a poker perspective, okay? So what I mean by outs is Workhorse. How many sources of revenue can they fall back on if one doesn't work out? So they have the last mile truck. They have the Metron, which I love. The Metron is the fleet management system, but I believe every commercial EV vehicle manufacturer is going to have a system like this. And then they have the Horsefly, which I am in love with as well. But how about a company like Proterra? They have the school bus, they have the public transportation bus, they have batteries, they have EV charging, and they have last mile delivery. That gives them more opportunities for revenue streams. It gives them more outs, more fallbacks. Take a look at the investor presentation real quick. We can see that Proterra Powered is their battery. They manufacture these commercial EV batteries. We have Proterra Transit, the mass transit buses, school buses, buses for colleges and universities, as well as last mile delivery vans and trucks. How about Proterra Energy? Fleet EV charging solutions. Big reoccurring revenue right there. I think this is going to be huge revenue. These buses, they own a 50%. Let me repeat that for you guys. A 50% market share of the entire electric bus market share in the US. That is 50%. That is unheard of. And as these big municipalities, these big cities transition to EV, if they can maintain that market share, I doubt they will be able to keep 50%. But if they can stay north of 10, 20% market share, this could be a 10, 15, $20 billion company. So they say it's a $260 billion total addressable market opportunity. And think about the market share that you need to be undervalued. So say they have a 10% market share, that would give them $26 billion in revenue. Now, I doubt they can have a 10% market share, but they have a 50% market share of the EV buses right now in the US. So maybe that's possible. And if that is possible, we're talking about an extremely cheap price point right now. They already had almost $200 million in revenue last year alone. This is a company going to market in a emerging market, EV, and we already have $200 million in revenue. So I expect this growth to continue. That $200 million in revenue could easily become $5 billion in revenue in the next decade. Remember, I said they have a 50% market share of EV buses in the United States. Their percent of EV penetration rate in buses right now is only, 5% maybe in the US. By 2025, they expect that to grow to 50%. So we're talking about a company that is expecting to see huge growth in the coming years. All right, remember this name, guys. Jennifer Granholm is on the board of directors. Jennifer Granholm. Let's just run a quick Google search for that name. Jennifer Granholm on the board of directors for Proterra is Biden's pick to run and be the Secretary of Energy in the United States. That is a huge deal. Biden has already signed a Make America provision, which requires the federal government to spend money on Made in America products. He also said he is going to transition the more than 260,000 vehicles in the U.S. fleet to EV. So we know that he's going to be spending money on Made in America vehicles. He's going to be switching to EV vehicles, and his Secretary of Energy sits on the board of directors for Proterra. Huge in at the White House. This gives Proterra a huge in. Imagine if he goes to her and says, I'm looking to switch out these vehicles to EV. Who should we go with for these buses that we need to get made? Let me think. All right, price target time. Price target time. All right, Proterra, one of my favorite stocks out there right now, this ACTC. I think this thing is, not only is it setting up great on the chart, look at, we got this bull flag, you get the pop up, bull flag formation, and then you get the breakout towards all-time highs. I'm putting a 2-year, 24-month price target of, drumroll please, $60 per share. Proterra. Going to the moon, in my opinion. I love this stock. My favorite stock out there right now. The third and final stock that I am going to be breaking down today was a SPAC. It used to be a SPAC. It's no longer a SPAC. It is already merged. But I think this is one of the most undervalued, best value stocks out there right now. Not only is it a value investment, a value buy in my opinion, it is also a growth story. Growth is coming into the sector. Growth is coming into this industry, into this ticker as well. And it's just flat out too cheap in my opinion. And that is Hyliion. Hyliion is now one of the biggest holdings in my portfolio. It is the biggest holding in my long-term portfolio. I am taking a stand on Hyliion. Initially, I bought way back here, but when this move happened, I'm not a bag holder, and I realize when a stock that you're in is up almost 300%, you need to take some profit. So I did, and luckily I did because we got the huge sell-off after the merger, but I just think it's flat out too cheap. It's consolidating above $15 a share, and I'm looking for this thing to break out of that $15 to $20 range and head back up towards 30. Let's talk about why I'm in love with Hyliion. Hyliion was a SPAC. It merged with a SPAC, I should say. And here's the reason why I'm in love with Hyliion. You have total EV over here, and we're talking about the trucking industry, which is absolutely 100% not ready for total EV. They don't have the range, and it takes too long to charge these trucks. Truckers want to drive for 600 miles straight. They want to hit a lick of 400, 500, 600 miles, and you just can't do that yet with the Tesla EV trucks, and we need a bridge. That bridge is Hyliion. Hyliion is going to act as the bridge. They're going to develop a bunch of customers in the trucking space, develop relationships with these customers, and they will purchase the Hyliion hybrid powertrain solution, which has almost double the range as most of the big EV trucks, Class 8 trucks out there right now. So they're going to walk the trucking industry across the bridge to total electric. Once the technology is ready for total electric in these big trucks, Hyliion will already have developed the relationships with these big trucking companies and fleets, and then they will in turn be ready to sell them their version of a total electric truck. That is my thesis on Hyliion. I'm taking a stand. I'm putting my balls where my mouth is. I don't know if that's the right saying, my balls where my mouth is, but that's what I'm doing. Putting my balls out on the table, I'm standing up, and I'm putting them on the Hyliion train. Here's what I was talking about with the range. Look at the Tesla truck. We have a range of 500 miles. Nikola, I don't even consider Nikola a real company anymore. I mean, I know GM's still involved with them, or maybe GM's still involved with them, but I just can't trust Nikola anymore. I will never put my money in Nikola. Even if it went to $1 million a share, I'll just watch it happen. I don't want to touch Nikola. All right, we have Hyliion, 1,300 mile range. It takes 10 minutes to refill the Hyliion or recharge, whatever you want to call it. And Tesla takes 30 minutes. It's too long right now. I know Tesla's King Kong of EV, but not in this space yet. This technology isn't there yet. Payload capacity, only 43,000 pounds for Tesla. Hyliion, 53,000 pounds. 10,000 pounds, that may not sound like a lot, but that is what? Over 20% more than Tesla. More stuff in a truck, that is more money for the trucking companies. Performance, Hyliion, 0 to 60 in the same time as the total Tesla electric. So you're not losing any performance with the speed, but you're gaining range and you're gaining more payload capacity. So right now I am down on my position. I have an average price of $18 per share. I've been adding on all the dips, held through these little pops, back up, buying dips, held through this pop, and I'm going to hold. And I think we do, over the next couple of years, see better than expected earnings reports. And it's going to take a while for these earnings reports to come out. But I think once the revenue starts coming in, people start to see my thesis that this is going to be the bridge to total electric for the trucking industry, then investors will start flocking back to the name and we'll break out of this trend that we've been in for the last couple of months. I'm putting a 2-year, 24-month price target of $40 per share. I think it's going to take a while to get back to these levels of $50, testing $60. This level here, it's going to take a while to get back up there, and that's okay. I'm willing to wait. Hyliion has tons of potential. This is one of those stocks that I'll probably hold forever, at least for the next 5 years, 6 years, 7 years. I just love it that much and see that much potential in it. I think we definitely break that $60 level at some point in the next 3-4 years, and I'm willing to hold it until that happens. All right, guys, that's wrapping up my top stocks, my top SPACs to buy and invest in and hold them for 2021. That long-term growth outlook, baby. That's what we're talking about. All right, guys, I love you. If you guys haven't yet signed up with Webull, you don't like free money or what? There's a link in the description. Webull's partnered up with Touchdown Trades. They're giving us 2 free stocks. Use that link down there. Come trade with me in the private Discord chat. There's a free trial down there. I send out my buy and sell alerts in real time. I'll catch you guys in the next one. Until next time, peace.